I suspect that there are going to be $15 billion in net flows between now and the end of 2025. And then we looked abroad to Europe and to Canada. And when you look there, ETH ETPs hold about 22 to 23% of the market. So that gives me a feeling that, if you look at the size of Bitcoin ETFs, the ETH ETF should be about 25% of that market. We do more complicated math to get to the exact $15 billion target, but I think you can have a lot of confidence. Wherever you look, there's demand for these spot ETH ETFs, and I think if they launch in the US, there will be demand here as well.
Hello, and welcome to our YouTube channel. Matt Hougan starts with an intriguing prediction. $15 billion in net flows into Ethereum ETF by the end of 2025. It's essential to understand that this figure represents new money entering the market, not just assets under management. This influx would make Ethereum ETF the second most successful ETF launch in history, trailing only behind Bitcoin. The methodology behind this $15 billion estimate involves a twofold approach. Firstly, Hougan compares the market cap ratio of Bitcoin to Ethereum, which stands at approximately 75-25. Applying this ratio to the AUM of Bitcoin ETF gives a sense of proportional investment expectations. Secondly, he examines the international scene, particularly in Europe and Canada, where Ethereum exchange-traded products ETP hold around 22-23% of the market. This analysis indicates a significant demand for Ethereum ETF, suggesting a robust market presence once these products are introduced in the US. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
Yeah, we just did an analysis of this. I suspect that there are going to be $15 billion in net flows between now and the end of 2025. Now, I should add a few comments on that. That doesn't mean $15 billion in AUM. That means $15 billion in new money coming in. Of course, Tony, there's already $10 billion in ETH, the grayscale product, which will convert over. And if the price of ETH goes up, which I know many of us think and hope it will, that will increase the AUM as well. $15 billion would be a ton of money. It would make these the second most successful ETF launch of all time after Bitcoin. The way we got those numbers is twofold. We looked at the relative market cap of Bitcoin versus ETH, right, which is about 75-25, and then applied that to the amount of AUM in Bitcoin ETFs. On the assumption that most investors will allocate proportionally. And then we looked abroad to Europe and to Canada. And when you look there, ETH ETPs hold about 22 to 23% of the market. So that gives me a feeling that, if you look at the size of Bitcoin ETFs, the ETH ETF should be about 25% of that market. We do more complicated math to get to the exact $15 billion target. But I think you can have a lot of confidence. Wherever you look, there's demand for these spot ETH ETFs. And I think if they launch in the US, there will be demand here as well. Before an ETF goes live, the SEC needs to approve two things. The 19B4, which goes through the Trading and Markets Division, and the S1, which goes through Investment Management. As you mentioned, for spot Ethereum, they approved the 19B4, saying they're ready for trading. The S1 is the disclosures that describes the risks of an ETF. Usually those are approved at the same time. This is a somewhat unusual situation where one was approved without the other. And, the estimates I've seen out there, Bloomberg's ETF analysts expect that these funds could go live the week of July 2nd. I think that's a reasonable estimate, but the truth is we don't know. We have to wait to hear more from the SEC and see where we go from there. I don't know what's going on behind the scenes with the SEC, but it's certainly the case that in the Ethereum ecosystem, we saw a lot of developments all at once, right? We saw the consensus lawsuit dropped. We saw this surprise progress on the 19B4s. We saw, maybe some shifting winds in Congress around crypto generally, and maybe around ETH specifically. So I think it's fair to say that, the environment in DC changed around Ethereum over the summer in positive ways. And we're seeing that expressed from my view in multiple places. Yeah, my hope and my feeling is that staking is a very important part of the Ethereum ecosystem, and ETPs should be an important part of how people invest in Ether. And therefore, long term, you want to see Ether ETPs that stake. And if you look abroad, if you look in Europe, if you look in Canada, if you look in some other markets, those products exist. There are a few challenges, Tony. There's some liquidity restrictions when you stake that can make processing the ETF a little bit more complex. There are, of course, regulatory questions. But, Europe and Canada proves that we can overcome those and run good products in an ETP structure. So I do think we will get there. But, look, going from no ETF to an ETF is a huge jump. That's what, 90+% of the returns historically. Adding staking would be like a cherry on top. And we and other issuers are going to, hopefully work to make that happen eventually. At least we're going to try. Yeah, I think you see a number of things if you look abroad, right? If you look at those European Ethereum ETPs that do stake, they don't always stake 100% of their assets. They need to keep some portion of their portfolio liquid to handle money that comes in and out. Because as we've seen from the Bitcoin ETPs, there are days where there are big inflows, and there are days where there are outflows. Even in a rising market, you get those outflow days. So you need the liquidity. I suspect that's what we're going to see. I think investors are going to do a variety of things in the ETH space. I think some will want to handle it themselves and stake it themselves. Some will want to hold it directly, but work with a third party to stake it. Some will want to hold it in ETPs if those launch. That's what we see in Bitcoin. People hold Bitcoin in a variety of different wrappers for a variety of different means. I think what you're doing makes sense, and I suspect many people will as well. But I think the last point holds with it, which is without a regulated futures market, it's really hard to get a commodity ETP through the SEC. In fact, it's never happened, not in the history of commodities. There's never been a commodity ETP, and that's what these crypto ETPs are. That doesn't have a related futures market that you can surveil. So I think we will either need futures to launch on Solana or XRP on the CME, or we'll need major legislative progress. Look, eventually I think we're going to get there, but I think you're talking 2025, 2026, 2027. I know that's an eternity in crypto years, but the Bitcoin ETF suggests it's worth the wait. So I would just say keep that in mind.
Hougan points out a critical regulatory aspect, the need for a futures market to support commodity ETP. Historically, no commodity ETP has been approved without an underlying futures market. For Ethereum and other cryptocurrencies to achieve this regulatory milestone, futures contracts must be established and surveilled. This requirement underscores the importance of legislative progress or market developments, which might take a few years but are expected to eventually materialize. As cited by professional investors in Hougan's numerous meetings, is the lack of regulatory clarity. This ambiguity has turned crypto into a partisan issue, but recent legislative actions suggest a shifting landscape. With increased political support and growing recognition of crypto's potential, the regulatory cloud is beginning to dissipate.
It's going to come up in the debate this week. That's my guess. I think this is such a huge deal. I think if the market realized what a big deal this was, it would already be trading at new all-time highs. When we talk to investors, and we have 20,000 meetings with professional investors a year, the number one reason they don't allocate to crypto is a lack of regulatory clarity. And there isn't regulatory clarity because crypto has become this partisan issue. But what you mentioned, with 71 Democrats crossing the aisle to support the FIT21 bill, with the SAB repeal going through both houses of Congress, with crypto now being one of the largest political action committees, with 50 million Americans owning crypto, I think the message is out to politicians that you can be neutral on crypto,
Yeah.
but you can't be reflexively anti. And removing that regulatory cloud from crypto over the next year or two is going to catapult this market in a massive way. So I think it's like the great untold bull story in crypto, and we're going to feel the benefits of it over the next 12 months, maybe as we get closer to the election and beyond. But I think it's a really big deal. I think it's more like when there's a giant thunderstorm that's looming on the horizon, but then the sun comes up and it gets less dark. So I don't think the cloud has gone away completely. I wouldn't say that we've signaled the all clear, but we've gone from a space of sort of gathering darkness to a space of increasing light and increasing clarity. I think launching, if we see these spot ETH ETFs launch, that will be another sort of brick in that wall that gives us increased clarity. Some investors will still be hesitant because we're not 100% clear on ETH from a regulatory perspective. But boy, are we in a better place than we were even in April, right? We've really made significant progress. And so I think that makes the case for ETH stronger. I think it will help more large firms build on ETH, and it will let more investors come into the space as well. We have some partnerships internationally. We have a crypto equity ETP that's partnered in Australia and one that's in Switzerland. But right now, we're a US-based provider. We're certainly always keeping our eyes on Europe as well. I was just using that as a reference point to show that investors do want exposure to Ethereum in an ETP format in every market that they've launched so far. And I don't think the US is going to be any different from that. Some of those investors feel more comfortable accessing European ETPs that fit under the UCITS framework, which is a specific regulatory framework that's sort of known throughout the world. Others can favor US ETPs. Others have restrictions. But the answer is some investors can access ETPs in different markets, and you see cross-border flow, particularly in the most liquid ETPs. Things can change really quickly. It's worth noting that we were talking SBF, less than 2 years ago. Yeah. And now we're talking Larry Fink and BlackRock and Ethereum ETPs to go along with the 56 billion in Bitcoin ETPs. It's remarkable how much can change in 2 years. And I think we could see that in this space as well. And I think we will, honestly. That's sort of my base case, is we will get there, but we will need some sort of change in order to do that.
Hougan likens this to a thunderstorm clearing up, bringing increased light and clarity to the market. He believes that the launch of Spot ETF will further solidify this clarity, encouraging more investors to participate in the crypto space. Hougan also touches on international partnerships and the rapid evolution of the crypto market. Despite being a US-based provider, his firm is exploring opportunities in Europe and other regions. The cross-border flow of investments in ETP highlights the global demand for Ethereum exposure. The shift from discussing figures like SBF to major players like Larry Fink and BlackRock within a span of 2 years underscores the dynamic nature of the crypto industry. Please like and subscribe my channel.